Dale Pinkert here from TradeGATEHub.com, sponsored, powered by TradeView Markets. Talking about markets, talking about FX markets, they've become very disorderly. I left you last week saying that I was looking for one more high to clean out the stops over this double top here in the end, and then you got short the next time we were back under the 145 level. If you did that, it paid. I didn't expect it to come from BOJ intervention. I thought it'd just be a natural market reaction. But speaking about the fact that BOJ came in, I do believe the likelihood with what's happened in, say, for example, cable today. And here, let me just show you EG. You look at that candle right there, that these markets have become disorderly enough, and the repercussions have stretched across the globe with a strong dollar, that I believe that the BOJ opened Pandora's box, and that eventually we're going to see a concerted central bank move. There is a meeting on October 12th, so that's only a few weeks away, but I think we're coming closer and closer to where the Fed and all central banks across the globe are going to come in here and try and break the huge momentum of the dollar, and so that we could restore some order to the market. When you see candles like this, this is daily candle, but even look at 4-hour time frames, these are massive swings, and the market can handle it, but the world can't handle it because of debt structures and emerging markets and so forth. And I know that a strong dollar, I've heard all the arguments that a strong dollar helps the Fed's case as an inflation fighter and exports the inflation to countries whose currencies are being deflated. So it makes the inflation picture worse for them. But I actually believe it's an easy card for the Fed to play because they're the lender of last resort, not just for America. They've come in during the financial crisis to backstop banks all over the world, in Europe in the last Great Recession. So I know they're aware they're a player on the global stage, not just for domestic things. And when you think about it, if they were to weaken the dollar, almost everything would start to turn, which I think is happening here today in the gold. You have a potential reversal week at some reversal day after making new lows for the move. And actually, silver went to an area I thought was going to be a decent area to buy a correction. So you really have to ask yourself, I'll get back to currencies, but look how well silver's held up during this onslaught of dollar strength, with gold making consecutive new lows after new lows. And as I said a week or so ago, I thought that would only generate a correction in the silver. And at 1850 at today's lows, we were still a buck above the September low. So pretty good action. In fact, when you look at what's happening across the board in Fiat, almost makes you think like, I don't want to be in any Fiat. Give me precious metals as a hedge and let that be my currency. But I want to get back to what's happening here in the dollar. And it's always been my contention that the commodity currencies would be the best trade when the dollar turned. And Aussie got down to my lowest level I was looking for, down around that 65.30. And when you think about it, it's only down 22 on the day. I know it didn't recover like Euro, and especially the cable recovery almost smacks of intervention. What's interesting about cable, this is the lowest in history. Okay, even takes out the George Soros raid on the BOE from many years ago. I think it was in the 80s. I'd have to go way back to show it to you, but these are historic lows in the pound. So, it's about fiscal policy in the markets not liking what the medicine is. But when you start to see these kind of moves, it's pretty hard to manage. An international type company has to hedge their currency risk. So my preferred long in this is the Aussie. seems to be carving out something. There is more divergence on some shorter term time frames. We're not confirming. Of course, I mean, first of all, we have to reverse like gold is right now. I say that's the strongest candidate for reversal today. And something else with all the bearishness that we have in the S&Ps, and this is what makes me think there could be a rally and we're not into Armageddon, is when you look at the copper market. So the copper market bottomed in July, after the low in S&Ps. But even though gold has made new lows, copper reminds me a bit more of silver, having corrected. And even though it took out the SEP low like silver did, it's still holding the July low, which was after the S&P low. So actually, copper looks corrective to me in that we could be digging in our heels at 3.25 for another move back to at least a major breakdown towards $4. So metal's looking attractive. Here's the white stuff. I still like the white stuff. You have platinum pulling back. Are we going to get a third drive to a bottom? I don't rule out anything in this environment, but I do like the pattern in silver from today. And I like the divergence that we're getting in gold. We're not confirming the lows here anymore on multiple time frames. Here's a 4-hour. Okay, it was a little under 30, but pretty glaring divergence there on the 4. Not as much on the 2. And let's see what it would take for a weekly reversal. We'd have to get back above the breakdown. So just like silver has to prove itself, gold would prove itself back over 1678, which happens to be this week's 2-week off number at 1674. So still looking to accumulate Aussie on weakness. Think that it could be putting in an important bottom, although we need closes back over 67. As you can see, this was a major breakdown, and to get reversals now, these markets have to prove themselves. So this is what you do when you have this type of volatility, is that you shorten your time horizons. You might have a position mentality, but have long term, but you have to have a trader scalper mentality when you get these kind of ranges. Very difficult to position trade. Even guys like Ray Dalio, who are great portfolio managers, are saying they're having a hard time looking out even 6 months to see where things would be. So that's the coaching advice for the day, is shorten your time horizon. So I'll be watching the yen to see if we get some type of failing rally. I like the metals. Thought we might wait till turnaround Tuesday, but it's turning. And here's the S&Ps holding the double bottom. So much bearishness here. I think we're going to get at least a pop. Who knows? Maybe we get back down, back to the breakdown level, back here around 39.30. I know some people think we could go to 42, and they'll start calling this a double bottom if we get a nice finish for the week. Obviously, all bets are off on a close under 3,600. Then I think you're headed towards back towards 3,000 eventually, which is the post-COVID high, pre-COVID high at 3,000. And taking a look at rates, here's a 10-year. It's just been on fire. So, making new highs again without the yen. That was part of my argument for looking for a top here above 145 with the stop hunt. And the next couple days are going to determine whether it's a failing rally or not. If we go above this 146 level, and you can see we did have a divergence here, I will attempt shorts, because I think the BOJ will have to come in. And be on the lookout now for the central banks to come together and coordinate and bring back some order. And be careful if these you have to reduce leverage because of the ranges, or just move to other markets that have better risk to reward trading potential than, what do you do now if you think you have the pound has bottomed? You have to risk today's lows. That's a lot of money, 500 pips off the lows. So realize when a market has, overstretched your bank account for you to be able to trade, and look for lower beta opportunities that relate to it. And I think there's lower beta in the metals compared to what's happening in the currency market right now. In fact, there's lower beta everywhere compared to this disorderly moves that we're having with the dollar getting parabolic to the upside. So tread lightly and pick your spots, and definitely take partial profits when your trades are working, because in a heartbeat they can go away. And then protect yourself by trailing stops. You can see Mike today here, a little less than an hour and a half away. See what Mike's doing here, see if he's looking at some bargains. I know it came in long some stuff. People were looking for Armageddon today, and I said, I don't think so. And the key to all of it would be the dollar rally to be terminated and eventually reversed, in my extremely accurate and humble opinion. So have a great session, everyone. Remember, don't just count your pips, count your blessings, and pay attention to potential reversals that are developing here. And as I said, shorten your time horizon, and we'll see if we have a double bottom developing in the S&P. So far, just an inside day. They could flush it one more time and hold the low too. So, I'm not betting the farm on what's happening today. It's just, it has my antennae up, thinking that central banks are going to come in. And I will say, though, that so far I like this daily candle in silver, held right where it had to. Great trading, everyone. TradeGATEHub.com.